I'm Bert Nussbaumer from macrobeat.co.uk. Well, the big day has arrived finally, payroll day. We've been waiting all week for that one. I'm definitely excited. Let's see if that sort of is holding up. We had a bit of a mix sort of data during the week, some missed, some beat, but I think there's just no question in my mind that the US economy is just sizzling hot, and that's really what I think this is all about. Personally, I think there is a bit of a shift in the market, at least on the FX space. We've seen some bigger dollar demand early in the week, which the market just thought has more to do with the month end and quarter end rebalancing. But funny enough, into July 1 and even this morning, that sort of trend continued. I just sense a little bit of a shift out there. And early in the week, I may have thought we need a really big payroll to turn things around and go back to sort of post-Fed reaction in the market. But with the price action I saw the last sort of 36 hours, I would actually start to believe the market senses a change. The market senses that maybe this sort of inflation story is a lot more sticky than previously thought. Yes, we have the transitory element, but we start to see evidence that the peak of inflation might actually be a lot higher than the Fed did expect, which means even with the transitory elements, the dip in inflation could actually still be, way above target. So I think the market understands that the Fed might actually have to accelerate the story come August, come September. The IMF did write about it, even talking about possible rate hikes as early as 2022. So the story seems to shift a little bit. So I think only a very weak payroll today would actually maybe derail the moves that we currently see. Number as expected will probably just continue the trends as we see right now, just maybe in a slower pace. And God forbid we get a 1.1 or 1.2 million payroll and we're going to just be right back where we were during Fed night, which means a lot higher dollar pressure on equities and continued pressure on the curve flattener in fixed income. So really all about payroll today, and probably given we're heading into the summer holidays, maybe that's really the key sort of trend that we might see in the next few weeks. The first chart I have for you is obviously on the job front. This is jobs hard to get versus unemployment rate. I could show you 20 different charts with the same sort of outcome. I think the Fed gets the story completely wrong. This is not 2008. The reason for the slower rebound in employment has sort of many different reasons: faster retirements, so a bit of labor shortage. We have obviously structural changes where some people don't want to return to the sort of old job, like especially in hospitality. And we obviously still have the problem where we have government guarantees where people just can't be bothered to go back to work. So if we solve that, we might see a very fast job recovery all of a sudden. Whether this is already the time today, I don't know. I wouldn't be surprised if we suddenly hit the number above 1 million, but maybe it's more a sort of time later in the year where this sort of bigger wave is coming back. Definitely in the 10 states, Republican-run states where they already stopped the unemployment benefits, we have really seen a very sharp drop in jobless claims. So there is that element of people not want to return to work. On the next slide, I just go through some of the effects charts. Euro dollar here at the sort of 118.35 junction heading into non-farm payroll. Strong number would definitely see us trending towards this 116.95, the lows from 2021, and possibly really start a stronger dollar trend upwards. Next slide, Aussie, very big area here as well. 74.20 is the sort of key people support, which would mean up to that point, we can talk about this only being a correction of the highs. Break 74.20 means Aussie's going to roll over, target somewhere in the low 70s. The next chart we have, this is dollar rand. Just want to sort of show the EM side of the world as well. Quite a big break this week out of this massive down channel from starting really in 2020 from the COVID highs. Continuous break here, if we stay above this 1440 would really confirm the break. Strong payroll, and I could see a really bigger move higher in dollar rand, unwinding some of these large shorts in dollar rand. Last but not least, dollar index. We talk about this 92 level probably since mid of last year. We're still here. Finally, we make an attempt on the top side again. Also here, strong payroll just finally sees the dollar reaching 94, maybe 96, and the trend is changing. Thanks very much indeed. Bye-bye.